Is this just a healthy pullback or the start of something much worse? We need to look at the most important charts in crypto right now. Alright, let's break it all down. What is up, everybody, and welcome back to Bitcoin Easy.io, the best place on the internet for your daily dose of no-nonsense crypto technical analysis. The market is pulling back, and today we're going to figure out exactly what matters and what is just noise. Today we're tearing down the charts for Bitcoin, the altcoin market caps with the TOTAL2 and TOTAL3, and of course the all-important Bitcoin dominance chart. And you'll definitely want to stick around because I'll be pinpointing the critical high time frame levels you absolutely need to have on your radar and updating my cycle top prediction based on this new price action. Now, all this movement isn't happening in a vacuum. We just got that cooler than expected core PC inflation data, which should be good news, but it seems the market is nervously looking ahead to the absolute blockbuster events next week. On Wednesday, we got both the US Q2 GDP figures and the massive FOMC interest rate decision. The calm before the storm, perhaps? This is a huge macro focus, a big shift from yesterday's video where we went on safari in our Gem Hunters episode and added 4 new high potential low cap tokens to the portfolio. If you don't want to miss these critical updates, especially with the market getting this spicy, make sure you are subscribed and you have absolutely smashed that notification bell for your daily videos. Right, guys, so we're doing things the other way around today. I'm going to focus here on the short term, first of all, on the daily chart, and then we go up into the weekly chart and the monthly chart to look at our potential cycle tops here and a potential scenario that could take us to those cycle tops. Of course, I'm still biased that we go higher here in this cycle, and there's different options here to see our cycle tops, but we also know that there's massive resistance coming in from the larger time frames, and we'll take a close look at that in a second. But of course, everyone is freaking out about the current levels that have been broken here, and we need to know exactly where we can find support. Already updated you about it this morning here. You can see over on X, the daily time frame, and here we see option number 1, the green circle, where we're finding support currently from the minor trend, of course, where we're connecting these touch points here in alignment with the 21 EMA. Of course, that is the more unsustainable version here of this trend. And then we have the secondary trend here that is clearly visible, originating from the April lows here to the current all-time highs. There we see the trend line in perfect alignment with the 50 on the Fibonacci retracement from this uptrend here, and then also here the 50 EMA massive trend support always. So key area to hold here. If this breaks down, then likely that we go down to our primary trend support, which is of course in the area of the 50-week SMA. Right, guys, and now over to the live chart here. You can see it. This is clearly the line in the sand here, also from a horizontal perspective, the prior highs of the range. And there you see that that was a massive horizontal support and resistance level. And there we see that that lines up with everything else that we just saw on that X post. Therefore, here, really the line in the sand. If that breaks down, then we go down at least towards the $100,000 range and potentially even lower than that to test the current primary trend support. To the upside, still the same thing here. We can see here that we had a bunch of attempts at breaking the prior all-time high here on a closing basis, right below $120,000, and that is exactly still the level that we want to break here. 120K is the number to the upside. If we start closing back above there, then that's of course very, very bullish here, and then likely that we continue upwards to our targets that we will talk about in a second. And then here at the bottom as well, the most bullish scenario here for this current daily candle would of course be to hold the support here now and then to close back within the range here above the 23.6 on the Fibonacci retracement above $117,200. Right, guys, and then we have a quick look now on the 4-hourly chart before we move over to the weekly chart and look at our targets there. Okay, guys, so here we can see that we still have some room to the downside. We're currently getting an underside test here of the prior range support. Of course, if we do find a rejection here after losing the 23.6 on the Fibonacci retracement and also after losing the 50 EMA here, then it's likely that we go down here to the 38.2 on the Fibonacci retracement, and that sits confluential here with the 200 EMA. Of course, here the key defining indicator that tells us whether we're bullish or bearish in a chart, and that is of course the key level that we want to hold here. So therefore, as mentioned in the post this morning as well, the 4-hour EMA 200 sits confluential with the 38.2 fib in the mid $113,000 range. There you can see it very clearly right down here. This is another key support level, and then if that doesn't hold, then we see the level that we just saw on the daily chart here, which of course we pulled out of the weekly chart right down here in the $112,000 to $111,000 range. Right, guys, and speaking about weekly levels, let's go over to the weekly chart now. Here we have it, and first of all, since we are experiencing a bit of downside now, a bit of a pullback here in this trend here, right? This here is the secondary trend that we've been looking at. And there we can see one thing that we observed the other day is the break of that 8-year trend line here, right? The resistance line connecting all the prior cycle tops here all the way from 2017. And there we see that we had the first ever weekly close above it here, something that we spoke about here last week. And now, of course, therefore the previous resistance here, which is massive resistance, can now serve as support here. You can look at this thing in two different ways. We of course checked it out here on a closing basis, and therefore it has been broken. Now it remains to be seen if we will hold up on a retest here. And then if you look at it here, if we just connect the wicks, right, if we go down here, we take that wick in. I'm not being extremely precise here, but close enough. And then we take the previous cycle top here from 2021. Then you can see here that we actually now got the rejection right at that trend line. And on a larger time frame, it makes sense to connect the wicks, because if you then shift down into smaller time frames, then of course these wicks are consistent, but if you connect the bodies, they always look different on smaller time frames, as the candle closes are very different across the board, right? So from this perspective here, we can clearly see where the current resistance is coming from here and why we're getting a pullback out of this area now. Key thing is here that, of course, we want to stay above here, the $112,000 to $109,000 area. If we start closing below here, then likely that we not only visit the prior lows here in the high $90,000 range, then we likely also come down here to test the support of the ascending channel that we're forming here, which of course sits confluential with the key moving average, the one that always tells us whether we're in a bull market or in a bear market, as every time we printed new all-time highs and then ended up closing below it. That was a clear confirmation that we're going into a bear market. And then here, if we just adjust this Fibonacci retracement to the current range here, we go to the bottom and to the current top. There we can see that the 61.8 here lays in perfect alignment there as well. So still a level that I've been talking about here on the channel for a couple of months now as the logical support level on the high time frames. If we break down the line in the sand here in the $90,000 range, right? You can see here from a horizontal perspective, prior massive support turned into resistance. Then the dynamic trend line, the 61.8 on the Fibonacci retracement, and our absolute key moving average here to identify the stage of the current cycle, the 50-week SMA. So very, very strong support in this area if we break down here, and then that here really is the line in the sand for the current bull market. And that level would only really come into play here if we have a massive drop, something kind of like a black swan event that takes us down there. But more likely that we continue here in this current trend, get a bounce from somewhere, and then it becomes decisive whether we can confirm above this trend line here. It's a line that I told you guys already that I'm not looking at this here to get confirmation of breaking it on the weekly chart, because this is an 8-year trend. So we're of course looking at this trend line and really want confirmation on much larger time frames. For me specifically, it would be the monthly chart. If we get a close above there, then I would consider that as a massive breakout here, and then Bitcoin could go to much higher price targets. But for now, the key level here that I'm looking at as our target for the current cycle top here is right up here. We spoke about it before. This is the key area where we find confluence of so many different Fibonacci extensions. And also if we connect here the current tops in this bull market, we see here that if we would get up here now to this area here within the next few months before the year end, then we would be somewhere in the range between $135,000 and $140,000. And there you also see here the Fibonacci extension. If we go from this low to the prior range highs here and then take it back down here to the retracement low, then we can see that the 100% level is there perfectly aligned. And then of course, if the bull market takes a little longer to find a cycle top here, then this area here is very interesting as well, especially if you also look at the date range here that lines up with this level sometime in November, December. If that would be the case, then we would get up here to this range of $150,000, which of course is the predicted cycle top for many, many people here for this current bull market. So a few scenarios here possible, but it all comes back down to this key resistance here of the current bull market here, where we're connecting the tops. If we get a breakout here, we can expect Bitcoin to go parabolic here and to go to much, much higher price targets. And if we now continue upwards here, get a rejection, then it becomes decisive if we get a bounce from there and then continue upwards to test that resistance line again at a later stage, and then likely that we print a top here. And these are just two different options that I have on the table that of course I wait for confirmation for, and targets that I set myself to take profits for different trades. Right guys, and now a quick look here at the monthly chart. Here's of course that key trend line, and there you can see it. If we're connecting the bodies here on the monthly chart, we can clearly see here that we got a rejection here now, and that we're still trading below that resistance line. And that is of course here connecting the 2017 tops, then the 2021 tops, both of them, and now also here our current all-time high. So closes above there on a monthly closing basis. Of course, this candle is closing next week. Then of course this would be massive here, and then we could look at much higher price target, as this resistance line has been holding here for the past 8 years. So yeah guys, this is it here for Bitcoin, and now let's go over to Bitcoin dominance. And guys, here we have it, the monthly chart, a chart that I've been looking at here with you on this channel for quite a while. And even in the previous cycle, I've been speaking about it a bunch here and always been looking at these circles here. These circles are something that I drew up a long time ago, of course, because they mark the new era of Bitcoin after this era up here, where Bitcoin dominance has always been between 97 and 100%, because of course, there was no real altcoin market, no real stablecoin market. And this drop here represents the massive change to becoming the market that we know nowadays, right? And there we can see here 2017, 2019, 2021, we always went above 70% to at least 71%. At the last top here was at just under 74%. So of course, this is still the target here for this cycle as well, that Bitcoin dominance continues up. A lot of people have been freaking out about the trend on the daily chart breaking down, but I already had you covered on this. I covered it a bunch of times here on the channel, that I'm not freaking out before we at least break the weekly trend, right? Here, very clear on the monthly chart, we're holding the trend line. Very clearly confirmed trend line with many touch points here on a very big time frame. So therefore, a very reliable support level here. And there we can also see from the structure, this area right here between 62 and 60% is massive support from a horizontal perspective as well, representing the previous high here in this uptrend. And that's exactly where we're trading between now. And then the current high here right at 65.3% on a monthly closing basis in this case here would give us very strong indication that we're continuing upwards here to test this key area in the 71 to 74% range. And if we go by the previous cycles, then of course it's also likely that we're going even higher than 74%, because of course a lot of people have been misinterpreting this chart a lot here and saying that we had lower highs here since we started coming up here to the 70% range. But you can see here on a closing basis, the last two tops here were exactly on the same spot, and then on a trading basis we actually been printing higher highs here. And of course guys, we go with the data that's provided to us and with the trend, and the trend is pointing in one direction and it's up, and before that doesn't break down, then we can expect the price to continue doing what it's been doing in the last cycles as well. Now let's go down here to the weekly chart. And here you can see a key level that I've been speaking about in my previous videos here, also the shorts that I've been posting across different platforms here on YouTube Shorts, but also on TikTok and Instagram. If you want to catch those kind of updates, make sure to follow everywhere. Last few days I've been extremely busy, so I've been focusing on the main channel, the big videos, but in the next coming days I will be bringing out more short form content as well. So here's of course the area that we've been speaking about here, massive horizontal level. You can see big resistance and support previously. And then also of course the 50-week SMA here and the dynamic support of this massive uptrend here. And therefore we said if we start closing here below this key area here between 60.5 and 60%, then of course this is getting ugly. And then it would look like we've seen the top here for Bitcoin dominance. And then we can start talking about alt season. But before that, this is still holding very strong here. Of course, we can still go a bit lower, shoot some wicks down here below the trend line. Of course, it becomes decisive whether we close below there or stay above the trend line, and also this key horizontal level and the 50-week SMA. So far, everything's still intact here. And of course, people have been freaking out about the smaller time frames. If we look on the daily chart here, we can clearly see that that broke down, right? We have this secondary trend here, and that we had a few times before as well, right? We can see here was another one, big uptrend with many touch points, also supported by the 50 EMA here on the daily chart. And the moment it broke down, and of course we went massively down here. Same thing happened here, but we always came back to bounce off the high time frame support, and now it's the case once again, guys. So here we see a very similar scenario as well from a moving average perspective. As far as resistance goes, we fell below the 200 EMA here. That turned into resistance, but then we managed to reclaim it right afterwards and then started forming this trend here. So this is the key level here, the level you need to look out for on the daily chart for Bitcoin dominance, right in the 62 to 62.3% range. That is what we want to reclaim here. That's a massive horizontal level, as you can see. And then ideally, we want to also get back above here 62.6% to reclaim the 200 EMA here. Then very likely here that Bitcoin dominance continues up to challenge the previous tops, and most likely two new highs towards the 70% range. Right guys, now that's it here for Bitcoin dominance. You know the key levels to look out for, especially on the weekly chart and monthly chart. These are very interesting currently because we of course on Sunday have the weekly close, and then next week, Thursday I think, or Friday, we have the monthly close. So there we really need to focus on that massive trend line there. Right guys, and now over to the total market cap charts. Starting things off here on the monthly TOTAL2 chart, and here's the key levels that we want to focus on. Now we need to close above to really declare a breakout here. Of course, TOTAL2 includes all the altcoins and just excludes Bitcoin. This is of course the other way around compared to Bitcoin dominance, and another angle to look at when altcoins break out versus Bitcoin, right? And here we can see the dynamic resistance line here where we went printing lower highs on a trading basis and also on a closing basis. And here you can see the line is right at $1.43 trillion. And that's the number that we want to close above here to really declare that altcoins, including Ethereum, are breaking out versus Bitcoin, right? Right now we're still above there, but then of course it depends on the current correction in the market that could still go deeper. And then of course that it's probable that we also close here back below that key line. So that's really the line in the sand here. And we're looking at it on a monthly closing basis here because of course we got a big monthly close. And this here on being on such a large time frame would be a very strong confirmation for that then. Closes below there would keep us here in the trend. And then of course a strong rejection there makes it likely that we have another pullback here. And then it's probable of course that Bitcoin puts in another leg up before altcoins follow up and eventually break out when Bitcoin then also hits the 70 to 74% range on the Bitcoin dominance chart. Now of course here the TOTAL2 charts looks very strong right now, and Ethereum of course has a lot to do with that, as it has been underperforming massively throughout this cycle until recent months here where Ethereum started to look very strong also compared to other tokens. And guys, by the way, normally I do the altcoins, I cover all the altcoins on Friday. I'll be doing that on Sunday in combination with Bitcoin for the weekly close. And I decided to do it like this today because these charts of course also give you a very clear idea of what's going on with all the altcoins, and especially TOTAL2 gives you a very clear idea of what's going on with Ethereum. So this is the key line, the key number that you want to look at next week when the monthly candle closes. And then here, if we look at on a weekly closing basis, of course we can see here that we had this local downtrend, which was of course coming from a higher high here on a closing basis. On a trading basis, we saw it on the monthly chart. Now, of course, a lower high, but this is the pivot point here now on the weekly. So if you want to catch this early and we potentially get a massive rally here towards the weekend, then of course this is the line that we want to break here, and that is right at $1.62 trillion. If we see TOTAL2 closing above there on a weekly closing basis, then very likely that this is continuing upwards, and then we can expect the Bitcoin dominance chart to break down sooner than expected. But of course guys, this is massive resistance here, so it remains to be seen if we can do this by the end of this week. If not, of course, the weekly candle closes after the monthly next week, and that could of course then really trigger a move into either direction, whether we close above that $1.43 trillion level or below. Right guys, and now over to TOTAL3. This of course here the chart excluding Ethereum, and that also displays in the fact that we printed a higher high here on a trading basis and also on a closing basis. And therefore this is the line in the sand here on a horizontal level, $1.13 trillion. And then here on a diagonal level, we of course want to break this area as well. So ideally we want to see a weekly close above $1.15 trillion here. And then we have a clear breakout here for all the altcoins excluding Ethereum and of course excluding Bitcoin. So these are really the key charts that you want to keep your eyes on to identify whether alt season is kicking in or not. And guys, by the way, that does not mean that Bitcoin will break down then. It's just that Bitcoin has led the market to a spot where it looks so bullish that investors are so confident to invest in crypto that they're not worried about investing into smaller tokens, right? These are just the dynamics of the market. Usually Bitcoin leads the way, then the bigger tokens, the bigger altcoins follow. And then when everything breaks out, then the really small tokens also start pumping. And this, of course, here is really nicely displayed by the TOTAL3 chart as it excludes Bitcoin and Ethereum. Right guys, and here also let's have a quick look at the monthly chart. You can see here that the dynamic resistance line here also perfectly aligned with the horizontal one. That's right at $1.03 trillion. So we want to see closes above there here with the monthly candle that closes next week. Then that would be of course a very strong sign that altcoins are breaking out against Bitcoin and that we really can expect alt season to kick in. Alright, so to wrap it all up, the pullback is here, but we've identified the key lines in the sand on those macro charts. The main takeaway is to watch those high time frame levels we discussed, don't get lost in the low time frame noise, and be prepared for volatility heading into next week's storm. And you're not going to want to miss tomorrow's video. We're dropping episode 12 of The Journey, and it's all about advanced synthesis. We're going full galaxy brain, combining moving averages, Fibonacci, volume, and RSI all together with price action to find that sweet confluence. It's a session that will seriously level up your trading game. And hey, to stay up to date with everything I do in the crypto space, follow me on X for daily crypto news in 90 seconds and quickfire chart updates that don't always make it to these full videos. You have to check out my Instagram and TikTok. If this video helped you make sense to the chaos today and gave you some clarity, do me a huge favor and smash that like button. It's free and it tells the YouTube algorithm we're doing something right over here. And of course, please remember that none of this is financial advice. This content is for educational and informational purposes only. Trading is risky and always do your own research. Now I'm out of here. And as always, guys, happy trading and see you soon.